Hey everyone, how's it going? All right, so we have been receiving a lot of requests to talk about different growth levers that a startup or a company can implement. So today's session is about talking about Starbucks primarily. And while a lot of people think about it as just a coffee business, what they don't realize is that if people take a look at the cash reserves that they have, from a couple of levers that they have implemented from a strategy point of view, they could be constituted as the one of the biggest banks in the US. So we'll talk about that. The other thing is that I did not personally want to pick up companies like the Teslas and the Apples of the world because there's enormous amount of data that is already available about those companies, and we probably many of the folks already know the levers that are getting implemented there. So the intent for today's session is to look at something slightly different. So before we go and start deep diving into what we're going to talk about today, just a little bit of a background on Starbucks. The company was formed somewhere in the early 1970s, if I remember, 1971 to be precise. And then the original owners sold it to Howard Schultz towards the end of the 80s. And what Howard Schultz kind of wanted to do, his vision was to take this single store that was based out of Seattle and make it a world global phenomenon. So he started expanding beyond Seattle, and that's kind of what his intent was. So beyond the other levers that Mr. Schultz implemented from a strategy point of view, I'm going to focus on three things primarily: the Starbucks app, the Starbucks gift cards, and what that resulted in having the cash reserves that ended up being with Starbucks. So with that said, let's go and get started. So Starbucks app, by the number you can actually see and say that, oh, 25%, that's not that big in the realm of the space that it exists today. But you have to take a step back and understand when exactly this app got implemented. It was, I think, somewhere in 2009 where the evolution of the apps were coming in. Starbucks was a very early adopter of creating an app that would enable the customers to be able to order the products from a mobile device. Realistically, if you look at it, or pragmatically, I should say, if you take a look at it, the positioning of Starbucks being in Seattle actually gave them a leg up on this because they understood in this with the surrounding companies like the Microsofts and the Amazons of the world, the technology was evolving, and as a result of it, the consumer appetite to be able to do certain things from a stickiness point of view, from an ease point of view, was starting changing. So the behavior was changing, and there was a lot more reliancy on the apps and the mobile devices. Again, 2009 is not that far away, but for folks who have not seen the enablement of what the app did to the consumer economy is huge, right? So at the end of the day, the key takeaway here is that being an early adopter of convenience to be able to give this channel to the customers made it sticky for the customers to be able to order the product. And of course, the product has to be good as well for somebody to be able to go in and use the app. But it's interesting that the early adoption of this app became so sticky for the mobile users, and as a result of it, pre-pandemic, if I one of the statistics that I had read somewhere that 80% of the orders that were coming in into Starbucks were basically coming in through their mobile channels, i.e., people were not walking into the store and getting the stuff they're looking for. It was either through drive-throughs or through the mobile app, which is quite interesting because then during the pandemic, one of the reasons Starbucks was able to maintain and, in essence, I could say, even survive the growth that they had, it's because of the convenience that they had offered through the mobile app. So being an early adopter of a technology, not just for the sake of having the technology, but rather having the stickiness factor and giving a avenue for the customers to be able to use the product easily enables growth. And like I said, I mean, in this context, we can see that it's probably 25% pre-pandemic. My assumption is during the pandemic, it became much higher, and then it probably has started tapering off again. But an early adopter of an app and a technology to go with the business, the convenience, like I said, gave them a leg up against their competitors. And if you're just thinking about, why Starbucks and why did I pick Starbucks? If you look at it from a market cap perspective, in the, let's say, food and retail industry, or food industry per se, Starbucks is only second to McDonald's when it comes to market cap. So it's not like it's a company that's just like a mom and pop shop that would not see the ups and downs. From a market cap perspective, it's almost the second biggest industry or a chain that exists right behind the brand, such as McDonald's. All right, let's move to the next one, which is basically talking about Starbucks gift cards. So, right off the bat, people are like, it doesn't really, what do gift cards have to do with this? Well, before I talk about Starbucks, and it's kind of a mirror approach if you think about it, one of the studies actually suggested that in the US alone, about $3 billion worth of gift cards go unused completely. And what Starbucks has been able to do is that it has created the opportunity for its consumers beyond the mobile app to be able to buy preloaded gift cards, as stocking stuffers or for any other matter for that, even on their mobile devices, and have cash preloaded on these cards, or buy a card that already has a preset amount on it. So what does this do? In essence, think of it this way: a consumer has basically given you cash for a product that they have not even bought, and in some cases they will never even buy. To now, as I said, to put that in context, almost $3 billion worth of gift cards basically go unused. So on their balance sheet, Starbucks has $2.5 billion in cash reserves available to them, even before they have sold the product. Now, from a financial perspective, what this basically means is that they can leverage this cash to be able to do expansions and growth and almost zero interest. So everybody talks about cost of capital, which means that if you go to a financial institution, you will have to, if you get a loan, you have to buy it at a certain interest rate. And then there's going to be, you have to make payments back to the customer, so on and so forth. The difference between here is that, like I said, this cash is basically given at zero interest rate to Starbucks from the consumers to be able to go do whatever they need to do. I don't see it as a liability. Many people say that, oh, this is cash that eventually the customer is going to end up using. That is true, but from a time frame of what Starbucks can use it for and utilize that revenue or that cash available to them without having to take out a loan, the return on investment is probably much higher. And again, like I said, on the flip side, if $3.5 billion, or another statistic basically says that $175 per person per household is the amount of cash that never gets used. So there's a significant amount of cash that of this, even let's say call it, $500 million that the customers don't use. That's still $500 million that is available to Starbucks without having to go to any financial institution or go to the market and raise funds or dilute the value of the assets that they already have. So again, this number, another aspect of this is US and Canada only. Now we know that Starbucks is a global brand, and this number could be much higher. So with a combination of the app that we talked about previously and being an early adopter, providing stickiness, and then the second avenue of having the gift cards available to the consumers makes it even more stickier. The value proposition becomes even stronger. And the products, of course, you have to be able to provide the products that the customers wants to buy. At one point, it's approximately 177,000. Yes, that's 1,000 different variations of the products that Starbucks actually sells. So people are going to come in there buying products, and they're kind of custom made for them, and it creates a relationship with the customer, so additional stickiness. And now beyond this, one of the what this has done now is that the combination of the cash reserves, as I was talking about, that is now available to Starbucks, it could be constituted as the 385th biggest bank into the U.S. or in the U.S. Again, it's mind-boggling that a business that has so much cash reserve available to them that it's almost akin to a bank. I don't want to belabor this point, but I want this to stick in for the people who are trying to become entrepreneurs, that you have to understand what are these sticky factors that go with the customer. How do you give them convenience, these customer journeys that they take? These are the main factors that Starbucks has actually used to be able to get to the point where they are today. So think about growth, but think about it, also from a capability perspective. Look into your organizations or technologies that are horizontal to you, maybe not just in the same vertical space, and see what they're doing to get this stickiness with the customer. Again, it's a huge testament of the growth and the approach that Starbucks has taken. So kudos to them for this. Now, on the flip side, I just want to talk about, one primary concern that Starbucks is seeing, which is also being seen by the likes of Amazon. It's in essence is unionization. The reason why it is a little bit of a sore topic is because when Starbucks kind of created the culture, they did not call employees employees. If you look them up, they actually call them partners. And the Starbucks want to maintain this direct connection with each one of their employees and give them perks and the ability to be able to grow into the organization itself. So it's also telling of the times from a maturity perspective that the Starbucks is growing, and they're now seeing these additional challenges that are coming in. But I'm pretty sure that based on the new CEO that has come into the organization and with the support of likes of Howard Schultz and others, they will be able to weather this storm as well. All right, so that's like I said, in a very succinct manner. I wanted to take a different approach and talk about growth and how Starbucks has been able to grow. If you have any other areas or companies that you prefer, feel free to share with us in our different social media channels. Talking about social media channels, here's a list of different ways, whichever one that you use. Feel free to connect with us. We're here for you. Keep on sending these good questions. And pretty soon we'll be sharing this outcome on our YouTube channel and other social media channels as well. So thank you for your time, and we'll see you on the next one. Appreciate it.